Hi there, very good morning to all our viewers who are joining us live on this broadcast on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. And as we are here to take you through all those news and cues that will impact your trading day, so do stay on with us. But let me quickly give you a quick roundup of where we left off yesterday, where we did see the benchmarks continue that uptrend, we would say, for the fourth straight session. Nifty 50 managing to hold on to those 22,500 levels. But is there enough pressure building up at these levels, and could that actually work as a resistance zone is what we're going to be talking about. And also the fact that this is a day before weekly expiry tomorrow, so there is that volatility that one cannot forget of. And across the globe, if you have to see, well, we did see stocks there on Wall Street, both the S&P 500 and Nasdaq closing at record highs. So whether the Nifty and whether the Indian benchmarks can also continue or carry forward that similar kind of momentum is what we're going to be discussing. But before all of that, and before we get our guests on board, let me take you through all the top headlines. Stocks continue to rally on Wall Street. The S&P 500 and the Nasdaq close at record highs ahead of numbers from Nvidia, which are expected later today. Markets are also awaiting FOMC minutes. And stocks in the Asia Pacific region have been trading in a mixed range despite that bullish handover from Wall Street. The GIFT Nifty is implying a rather flat start for the Indian equities. Crude prices continue to drift lower. Brent crude slips below $82 a barrel as geopolitical worries subside. The gold prices, though, on the other hand, hold near record highs while aluminium hits a 2-year high. And in key earnings to track today, US side, you're going to see the US sales likely drive up Sun Pharma's earnings in the fourth quarter, while margins may also come under pressure. Also watch out for earnings from Grasims and Power Grid Corporation. Market regulator SEBI has announced a new framework for considering the unaffected price of transaction following the confirmation of market rumors. The framework will come into effect for the top 100 listed companies from the 1st of June. The regulator has also proposed a tweak in norms governing buybacks and merchant bankers to facilitate the ease of doing business. Well, we barely have 10 minutes there to go to understand whether we are going to, propel further from those 22,500 levels. It has been quite a range that we seem to be stuck in. But if we do break that, at least in the positive sense, then maybe 22,600 to 22,800 are where we could see the resistance coming in further from here. But then if we do break lower, then 22,300 is where people are saying that we could take support in. So we have to see what really will be propelling this, or rather whether we're going to be in this consolidation mode and for how long, that remains to be seen. And we'll be discussing all of that and more on the show. Joining me for that is Rajesh Palviya from Axis Security. Good morning, Rajesh. Always a pleasure to have you with us here on the show. Let's start up. I've been talking about this range that we seem to be stuck in. Do you think we're going to be here for some time longer, or do you think it's going to be the fact that, we are stuck in this 22,500 or so, and we've been holding on to it, fourth session now that we are trying to, break out from this zone? What do you think will take for it to go, and what are the charts really showing? Is there a more positive bias, or do you think there could be, some shaky ground before we move further uptrend?
Good morning, Stacy. So chart structure is positive. Derivative data is also positive. So we have a view that, yes, possibly we can, maybe we can see a breakout above 22,550, 22,600 zone in next couple of trading session. Though we have a weekly expiry for Nifty option tomorrow. So, but still looking at the put base concentration at 22,400, 22,500, that clearly shows that, base has already shifted higher. And the sectorial behavior is clearly indicating that, possible momentum can be seen on the higher side, and possible breakout we can see in next couple of trading session. So one should remain on the long side of trade until the Nifty spot not slips below to 22,400 on a closing basis. So that is the important support area on the downside for Nifty spot at this juncture. Broader market is also showing good traction in terms of buying. A lot of sectors, metal, automobile, capital goods, defense, even pharma, uh, automobile, all these sectors are showing good traction in terms of buying. So we believe that, broader market is on the bullish direction, and we are holding the bullish view. To play this upward momentum, we are initiating here to buy 22,500 call option, which was 23rd May of 23rd May, which was closed at around 121 rupees. Keep your stop loss at 95 rupees, and we are projecting target of 170 to 180 for this call option, as we are projecting this upward momentum can extend to 22,600 to 650 zone. Even on the Bank Nifty is holding the ground around 48,000 level. Even if you look at the put based concentration, so major put writing is happening at 48,000, 47,700, even 47,500 zone. So until Bank Nifty not breaks below 47,700, trend is likely to remain on the bullish side. Though there is less participation from the PSU bank, but still some short covering was there in the previous day. If some follow-up buying action we could see in today's session for most of the PSU banks, then possible Bank Nifty may attempt to give breakout above 48,200. That's the major challenging level at this moment for Bank Nifty spot. Once this breakout happens above 48,200, then there could be a short covering action, and then possible rally can extend to 48,600 also. So for Bank Nifty also, we are holding the bullish view at this juncture.
Right. In fact, Rajesh, do stay on with us. Let me also get our viewers up to speed with a couple of the F&O cues that we could be looking out for. And you did mention, that 22,500 call being the one having a maximum open interest. In fact, we did see the call open interest was maximum observed in that 23,000 strike, and on the put side it was that 22,500 which owned that maximum open interest. So it can then go on to act as a key support level, just like what Rajesh was in fact pointing out. And then if you look at the Nifty put call ratio, that one clearly indicating what the market is, the sentiment there on ground, and that one seems to have fallen just a little bit, coming to at 1.15 on May 21st versus the 1.24 levels. But remember, anything above 1 means that traders are selling more put options than the call options, which generally is an indication of a bullish sentiment in the market. But how long can that prevail is something that needs to be seen. And in terms of stocks in the F&O ban, well, a total of 13 once again in that F&O ban list. NSE has added Indian Energy Exchange, Aluminium, National Aluminium Company or NALCO, Punjab National Bank into this list, whereas it has gone on to retain Aditya Birla Capital, Balrampur Chini, Bandhan Bank, Biocon, Granules India, Vodafone, India Cement, Pyramid Enterprise, as well as the entertainment. What is removed from the list today, which is interesting, is Birla Soft, Hindustan Copper, as well as SAIL. Those three have been out of the F&O ban list. In terms of the fund flows that we saw all of in yesterday's trade, where FIIs again have turned into net sellers, where they went on to sell shares worth of 1,874.54 crore rupees, whereas DIIs did most of the heavy lifting. They pumped in about 3,548.97 crore rupees, according to the provisional data from that NSE puts out. In terms of earnings that we need to catch up with today, there is Grasims Industries, Sun Pharma from among the bigger players, Power Grid and power stocks are going to be one in focus. But also on the other hand, you have tech stocks or new age tech stocks like 197 Communications, which is the parent of Paytm. You have FSNE, the e-commerce, which is the parent of Nykaa, and the like. So all Gland Pharma from the Pharma pack is also going to be putting out its numbers. So we're going to be tracking those closely. But if you have to also look at the fear gauge and what the India VIX index is really telling us now, we are seeing that volatility gradually increase, at least as we approach closer to that June 4th general election result day. But this could actually put out a cautionary note for pretty much traders or investors till that time, because everyone would rather want to sit on the fence and see what the outcome is, although most of them say that it is pretty much factored in. Now, the India VIX index, the fear gauge, we would say, has risen by about 6.26%, coming at 21.81. This is the highest closing level it has seen since September of 28th. 2022. So really a 20-month high there coming in for the India VIX index. Rajesh, maybe you want to come in and give us a little bit, perspective on how one should be looking at this India VIX index, because ahead of the general elections, where obviously there is that volatility that is expected, but how much does it really impact a trader, or how much will it really change in terms of people who are looking or waiting and saying, let's take a cautionary stance at this point?
Yeah, so now India VIX is at elevated level of last 2 year, but still, if we compare with the historical data of previous general election, it always trades around 40-45 trajectory, but this time it's trading at around 21-22 kind of zone. But still, the market is more confident towards the verdict of this general election. That's why we are seeing that India VIX still at 21-22 level, as we are almost near to the outcome of this general election. Maybe there could be some spike we can see in next couple of trading session towards 24-25 level also, as we have already seen a breakout on the India VIX chart of last 4-5 trading session. So looking at this behavior on the technical front, we believe that 24-25 could be the next level where India VIX can scale up. Volatility is likely to be there in next couple of trading session, but as the broader market and the themes which has confidence on the long term growth trajectory are continuously showing buying flows. So I think maybe index may exhibit some volatility, but stock specific action is clearly there, and most of the participants are now focusing more on the stocks rather to trade on the index. So I think for index trader there could be a volatility, but on stocks front, many themes which are playing out at this moment. Most of the participants are focusing on those opportunity in the market. So I think one should avoid index trading for some couple of trading session. Stock specific action is likely to be there.
Rajesh, you're saying
more
avoid
on the stocks rather to focus on index.
Yeah, you're saying avoid an index, but one index that's really outperforming all throughout is the mid cap. That whole front, we saw the mid cap index again touch another record high. What's really fueling this? So, do you think there are more stocks within this pack that are actually worth buying or looking at this point, or even the mid cap index for that matter?
Yeah, definitely. So, a lot of money is chasing, quality mid-cap, and that's why we are seeing that mid-cap index is continuously making higher top, higher bottom formation, and now almost mid-cap index is enjoying its all-time high trajectory. So, we believe that, still there is steam left for mid-cap stocks, and a lot of opportunities are still there in many mid-cap stocks. So, we believe that, this traction is likely to continue on the higher side. Possible target for Nifty mid-cap we can see towards 53,000, even 53,500 in the next couple of weeks. So I think buyout dip should be your strategy at this moment on the mid-cap side also. Yes, your stop loss should be at 48,500. So if you get any opportunity in volatile market towards 50,000 should be opportunity to buy again in the mid-cap space.
Right, so you could look at those levels, 50,000, or wait for a dips at least to look at the mid-cap space is what Rajesh is saying. But let's look at where we've opened. We've opened above that 22,500 levels for the Nifty. So, something that perhaps the global markets and that good handover that we got really showing in terms of where the Nifty has opened, at least for that matter. Even your sensex is above that 74,000 level, so just about 0.1% for both the sensex and Nifty, but both of them in the green, at least on opening bell. Whereas the mid cap index there too, that one seeing almost 0.3% of gain, 52,200 odd levels is where the Nifty mid cap 100 is trading. Your BSE small cap too is seeing almost more than half a percentage of gain rather. So that one also quite comfortably in the green. IT index, another one that has seen a couple of components that really work towards its favor, and that's what we're seeing the IT index there in the positive, 0.5% of gains coming in there for the IT index as well. Pharma too seeing gains this morning. So you are seeing positivity in pharma as well as IT, whereas the bank Nifty actually, that one is the only one I can see on your screens in the red for that matter, and that one coming under rather flat, we would say, but above that 48,000 levels. And we were just talking about how perhaps 48,200 could be somewhere that we could see the bank nifty going up to. So that one some bit of pressure right now for the bank nifty, but your FMCG and consumer name, those ones are seeing some bit of positive reaction. So both of the Nifty, FMCG as well as consumption basket, both of them seeing in the positive this morning. So let's look at which are the other sectoral indices. The metal index, this one, remember yesterday was the top gainer in trade. You had the likes of a Tata Steel, you had the likes of a Hindalco, all of them among your top gainers yesterday. The metal pack gaining almost 4% in trade, but top gainers there on your screen, you have the likes of a Dr. Reddy, Britannia, as well as Ultratech Cement. You also have Nestle India, Tata Consumer Products, as well as Divi's Lab. So a couple of those FMCG counters that are making it up into the top gainers. Coal India, HCL Tech, as well as Grasims ahead of its earnings that you're seeing in the positive. Power Grid though seeing some bit of pressure. Again, this one also ahead of its earning. Sun Pharma also is going to be putting out its numbers today. So both of those counters are seeing some bit of pressure before their earnings. Whereas the other laggards seem to be M&M, Adani Ports, as well as Shriram Finance, which are among your laggards. Hindalco today, from being the top gainer yesterday, it is seeing some bit of profit booking, we would say. Hero MotoCorp as well as Bharti Airtel among the big laggards in trade. But let's look at why these stocks and which of these stocks rather are making this difference towards the benchmarks. And let's talk about the metal pack specifically, because we did see Hindalco today in the laggard list, but all of yesterday it was Hindalco, Coal India, Tata Steel, JSW Steel, all of them among the top gainers. We saw that metal pack really touching, metal index, in fact Nifty metal index up close to about 4%. Maybe I get in Rajesh and get his perspective on how one is to be trading the metal pack, because one day we are seeing them in among your top gainers, then the next day perhaps profit booking. What is it really, Rajesh, that we should be looking out for when it comes to these metals, and what are the names that you would suggest among these that are likely good bets at this point?
So very strong buying action is taking place in most of the metal stocks. It's not limited to the only stock specific. It's metal commodity basket is also moving up. The way copper, zinc, and other metals are moving up. So it's broad-based buying action is happening in most of the metal stocks. From metal basket, we believe that Vedanta is looking very promising. Though stock has moved up in last couple of weeks sharply, but still there is a long-term breakout on a yearly chart. And looking at the breakout on the long-term chart, we hold our bullish view, and we believe that this rally can extend further in Vedanta, and possible target on the higher side 550 to 600 could be the possible target on a positional perspective. So buy on dip should be your strategy for Vedanta at this juncture. If you get any opportunity towards 490, 485 zone, it's again attractive level in the decline. Keep your stop loss at around 470, and our target is 550 to 600 for Vedanta. Again, from metal space, we like Jindal Steel and Power. That stock is also enjoying its all-time high trajectory, and the way stock is moving up on a weekly as well as on the daily chart, series of higher top, higher bottom formation is taking place. We believe that this Jindal Steel and Power can also continue its upward momentum. Possible target we can see towards 1090 to 1100 in the short period of time. So Jindal Steel and Power is also buy with stop loss of 1020. Even Hindalco, National Aluminum, all these stocks are looking very promising. And I think one should remain on the long side of trade for the metal basket. The way whole sector is showing good buying interest, we believe that furthermore upward momentum we can see in the coming trading session. So keep trailing your stop loss as per your risk appetite and ride this rally. And the way most of the metal stocks have given a breakout on the long term chart, that clearly shows that this rally can extend further, and possible another 5 to 10% kind of up move we can see in the stock specific in most of the metal space.
trail your stop losses when it comes to this, and it is definitely, in a long term perspective, metal is something that you could be looking at. Let's also address a couple of other stocks that will be in focus, and also request all our viewers to send in their queries so that we can get Rajesh and our experts to answer them for you. So send them on our live feed and we'll try and take it up. And Rajesh, do stay on for that. But let's address a couple of stocks in news, and one will be in focus, will be that of BHEL. Now, this because the company has gone on to report profits which have fallen by about 25.6%, coming in at just at about 489.6 crore rupees versus the 658 crore that it was earlier. The revenues have risen just marginally by 0.4%. So that is rather flat. So we're having a couple of brokerages that have come out with the reports post this numbers that BHEL has put out. Even though the numbers don't seem to have uplifted the street so much, the brokerages seem quite cautious, we would say, at this point. CLSA has a sell call with a target price of 189 per share. They say that the company has reported that surprise decline of 25% in the Q4 PAT. The company's backlog too has grown by about 44% on a YOY basis as thermal orders have picked up. Although operationally this seems to be another weak quarter with quite flat execution, is at least what CLSA is saying. There are other reports also that have come from other brokerages on BHEL. Nuvama, on the other hand, maintains a buy rating, and they have hiked the target price to about 400 from the 265 it was earlier, whereas they say that the higher provisioning will perhaps go on to hit the profitability, but the pipeline still looks strong. They see that they are best placed to ride this thermal power wave over the next 12 to 24 months. They've also gone on to revise the FY25 and 26 EPS by just 0.4, and for 26 it is 7%. They say given the execution of this low OPM as well as legacy orders that will transpire by FY25 and pick up in a new order execution by FY26. So quite interesting then. Maybe we'll get Rajesh's perspective on how the charts are really looking at for BHEL at this point. Is there a reason to be looking, the counter definitely reacting to those numbers as well as the brokerage reports that have come out on the same. But Rajesh, is this a good opportunity perhaps to buy on this dip for BHEL, or what would you caution our viewers?
I think yes, one should buy this dip as if we analyze on the daily chart, stock is moving in upsloping channel. Stock is very well holding about all its near-term, short-term moving averages. Weekly chart is clearly indicating that sustained uptrend is already there in the stock prices. So across all time frames, stock is looking bullish. On a monthly chart also, we have already registered a long-term chart breakout. So this dip should be used as a buying opportunity. Your stop loss should be placed at around 298 to buy this dip. And again, once stock manages to cross about 316, then this really can extend, and possible upside target we can see towards 335 to 340. So BHEL, one should use this decline as a buying opportunity. 298 should be your stop loss to buy.
298, keep that stop loss. It is trading somewhere around 308 or 9 right now. So that is going to be interesting if you can manage to keep that stop loss. And Rajesh is in fact seeing a longer term view of it even touching 335 odd levels. So we'll have to wait and see how BHEL, but this could be a good opportunity to buy on dips for this particular stock. Let's also talk about what the market regulator is doing. And this is one headline that has taken, right from traders to even a retail investor to sit up and take notice. That's because SEBI has issued new guidelines for managing stock price impact that emerged from market rumors. Now, this is quite interesting because this circular, which was released last evening, pretty much after market hours, SEBI went on to say that they were introducing this new concept of unaffected price in order to mitigate any kind of artificial stock price fluctuations. They went on to explain that the listed entity will be now required to verify the market rumors upon any kind of material price movement that it sees. The stock exchange will also then issue a framework for this material price movement on their respective websites. Now, the verification of this market rumor will be applicable for the top 100 listed companies with effect from June 1st. So, starting next month, they will have to, verify if there is this kind of fluctuation. They will have to come out and give a response to the regulator. And in fact, for the top 250 listed entities, this and which is your next top 150. After that, this will come into effect from December 1st, 2024, according to this SEBI circular. Quickly, let me get Rajesh's view and then also bring in my next guest to get his perspective. Rajesh, do you think this is going to change or this is much needed? Because we are seeing this kind of, when there are these high frequency trades that happen, nobody is really accountable, and we see a lot of flip-flops or big swings that we see market take. In fact, do you think such a thing is necessary and it's a good step taken by the regulator?
Yeah, definitely. So regulators are very proactive, and they are closely monitoring all activities of market, and to protect the interest of small investor. I think it's a very good step, and that will also help to reduce the volatility and the kind of spikes which we generally see in the market because of some news flow or something. So I think verification of this thing will also trim down the speculation activity, and this is a very good step by the regulator, and this will also help to protect the interest of small investor in the market.
Right, let me bring on board Subham Agarwal. He's the co-fund manager at Aequitas. Good morning, Subham. Always a pleasure to have you with us here on Moneycontrol. We were talking about the market regulator being proactive, bringing in these steps, trying to, make sure that the retail investors protected. And in that, on those lines, they have put out this circular saying that in case of there are market rumors, companies will have to come out and give this verification. In fact, for the top 100 companies, it will start as early as June 1st, 2024. How do you view this step? Does it make, does it make a little bit of a blip for traders, or this is something that will go on to work, well, not just for retail investors, but also increase the kind of trading volumes and the rest?
First of all, thank you very much, Stacy, for inviting me on Moneycontrol. Having said that, it's very in the current environment. If you see last 4 years, what has happened is retail participation has increased tremendously. So in the cash market, I think the number of participants has gone up by 4x, and in F&O it is somewhere around 8x. So obviously they are a bunch of investors which needs to be protected, and it's good to see SEBI being very proactive in taking steps to ensure that they are not taken away. Their wealth is not taken away by frivolous element in the market.
Right. In fact, let's then speak about the broader perspective. There is a report that Bernstein has come out on India strategy, and this has more to do with, the ongoing earnings season as well as the elections that are going by. Now, Bernstein expects that there could be a short-term rally, especially if the election results rather in that week. Potentially, we could, or the Nifty could breach that 23,000 target levels, but then they could also expect profit booking as the reality and execution of these valuations will go on to emerge then. Now, according to them, they're also saying that sectors that will lead are going to be infra, manufacturing, domestic cyclicals, even financials by state-owned enterprises. In fact, yesterday we had the Prime Minister himself come out and speak about PSU banks and how they have really seen some multifold growth in this time that the Modi-led government has been in power. Do you think it's already factored in the results, and because of that, what really, like how Bernstein is pointing out, what according to you would be those sectors that are really going to see a good, or rather will be the ones leading up to a good rally?
Thank you. So I think there are a lot of questions in this. I'll try to address one by one. So firstly, our view on the market. Obviously, Bernstein has come out with a report. We don't like to opine on other opinion, but what we have been very vocal about is the valuation which is currently there in the market. If you see the small cap, especially small and mid cap, especially in the last 3-4 years, since the COVID bottom, it has become a 5-bagger. Now, obviously, this is a dream run. and I'm not even talking about the SME space. So if I were to contextualize this entire scenario, people often say that market tends to climb the wall of worry. I would go ahead and say that my markets currently has actually conquered the mountain. Now it's a fruitless exercise to debate whether we have already reached the summit or not, because we are already way ahead of the tree line. And for us, oxygen is becoming thin, and in case of market, generating further return from here on is going to be super difficult. So that's our view on the market, and we don't like to predict the future. I don't think so any of us are clairvoyant. So what we rely typically on is value investing. Right now, as I already mentioned, valuations are way out of whack, and the sectors that you mentioned, manufacturing or PSU or infra, etc., these are plays that we had taken large bets 3-4 years back. So we have all obviously made a decent return out of it. Now the strategy that we are following is sell at every rise, and that's our that have been our motto since the last 2-3 months. And having said that, in the last 11 years, we have taken cash call twice, this being one of them.
Right. So interesting. You're playing the sell on rise game, perhaps in this environment of volatility, one would say. But let me quickly try and answer a couple of questions with Rajesh. Rajesh, there are queries coming in on Torrent Power as well as Torrent Pharma. So maybe you can help Naveen on both these counters. How is he supposed to be navigating both? And in fact, maybe speak more on the power sector, because a couple of queries coming in on how one should be playing just the power game. Today we have Power Grid also that is going to come up with its results. So firstly, your view on both Torrent Pharma and Torrent Power, and then overall power sector.
So Stacy, Torrent Pharma structure is bullish. Stock is holding about 20-day, 50-day moving average. That clearly showing that there is a strength on the near-term structure also. Stock is just slipped below to its all-time high trajectory, but looking at the near-term structure, stock is now consolidating in a range. The range for the consolidation is in the range of 2600 to 2750. But we believe that once stock manages to give breakout about 2750, then there could be another round of rally we can witness in Torrent Pharma, and possible target we can see towards 3000 level also. So if he has already bought, invested at lower level, he can hold on the position. Your stop loss should be placed at around 2600 to hold the position. Even in the minor dip, you can add and accumulate the stock, as long-term structure, short-term structure is bullish for Torrent Pharma. Torrent Power stock is showing some recovery in last couple of trading session. Stock managed to give breakout of its falling trend line on a daily chart. So that's a sign of trend reversal on Torrent Power. So at this moment, you can keep a stop loss of 1400 to hold long position. That's the inflection point at this moment. So 1400, if it's able to hold out 1400 level on a closing basis, then there could be a rally towards 1500 to 1540 on the higher side. So Torrent Pharma, for trading perspective, yes, our view is bullish at this moment. 1400 should be your stop loss. As you talked about power space, so I think yes, not many power stocks are doing good. We like Power Grid, the way stock is trading near to its all-time high trajectory. We expect that Power Grid can outperform further, and possible target for Power Grid we can see towards 345, 350 in a near-term to short-term perspective. So Power Grid is buy with stop loss of 315. Another stock from the power space that we like is NTPC. That stock is also showing good traction. Stock is now almost trading near to its all-time high trajectory. The way open interest is there on the long built-up is already there. So we believe that NTPC may also continue furthermore upside. Possible target we can see towards 390 to 400 for NTPC. Buy on dip should be your strategy. 368 should be your stop loss. One more stock from the power space that is most discussed among the traders, that is Suzlon. We believe the way Suzlon has given a breakout on the daily chart, I think this stock is also looking very interesting. if I'm not wrong, stock is due for the quarterly numbers
Yeah.
in the coming week. So I think the way stock has already broken out, it's a consolidation range on the daily chart. So I think the Suzlon is also buy with stop loss of 42. Upside target we can see towards 48 to 52.
Right, interesting picks, and I hope that answers Srivardhan's question. He was asking for a couple of stocks within this space. So NTPC is there, Power Grid, as well as Suzlon among those that Rajesh is suggesting. Quickly back to Shubham, and also let me also address a couple of stocks that also are seeing some action. We are hearing about perhaps a block deal that would have taken place in that block deal window that happens before opening in terms of Polo tires, where we're given to understand that Warburg Pincus, I beg your pardon, or the likely entities, one of its subsidiaries, that is White Iris, may go on to sell its entire stake in Apollo, and this block deal could be the size of anywhere close to $100 million to $120 million. The floor price, though, is likely at 463 rupees per share, which is at a discount of about 4% to the current market price. And Warburg Pincus, via these subsidiaries, holds close to 13.5% stake in Apollo Tires. Currently, we are also being told that IIFL is the sole broker in this deal. So quite interesting. If that trade does go by, we're talking about somewhere close to 3.5% that Warburg Pincus and its subsidiaries is looking to divest from Apollo Tires. Another interesting market action is that from Coforge, which sources are saying that the board has approved a fundraise of up to 2,240 crore rupees, this via a QIP route again, and the issue price is somewhere at 4,531 to 4,600 per share. The QIP proceeds, what we are being told, is perhaps to use for their acquisition of Signity Tech. This is where they might be using some of this money. They had already got that approval before, but remember when they did come out with this news that they wanted to go and acquire Signity Tech, that stock seen a lot of selling pressure, that one could say. The earnings also were not really up to the mark for this particular counter Coforge, but yesterday they did also come out and announce that they are in partnership with Microsoft for that whole Copilot range of what Microsoft is putting out in terms of generative AI. So that will be interesting to see how this counter really reacts to it. We are seeing some positive momentum right now on the stock. But let me talk about IT then in general with Shubham. Shubham, IT sector has seen quite some interesting moves. People normally are keeping it as their contra bet at this time because they are hoping that the Fed rate cuts will come perhaps by the end of this year or start of next year, and which is perhaps when we're going to see that trickle down into the spends that the IT companies will see. Are you of a similar view as well, or would you think that IT maybe not at this point? We are also talking right ahead of Nvidia's results in the US, and a lot of hope spin there on that one. Do you think that we're going to see that trickle down effect even happen here in Indian tech?
So on IT, Stacy, we have been on a wait and watch movement. So if you see the larger ITs companies, they have not really performed well when it comes to growth in terms of profitability, and their guidance also seems to be lackluster for the rest of the year. Obviously, in IT, what has happened is there is a lot of disruption, and US kind of has seen slowed down. So it is having a direct bearing on the larger IT space. However, the mid cap IT space, the profitability has seen decent jump. So we will see. In fact, in our office, we were debating interesting stats. So if you observe the last 12-year trend of CAT admission, it had increased significantly in the last quarter or the last year, and that's when we debated. Okay, people may not be very confident as of now of the outlook in IT, and they are probably joining CAT. So it was a lead indicator for us, and we have not added anything in IT, but we'll stay vigilant if there is an option in future.
Right. And do you think, this earnings or in the Q4 earnings so far, we've seen quite a bit of slowdown. Do you think there is perhaps further slowdown that we could see in FY25 and 26 compared to what we saw in the years before this? Because earnings growth has been quite limited in terms of at least most of your Nifty companies, if you have to judge them by.
So if I were to analyze the last 3-4 years and then tend to understand what will happen in FY25, what I observe is post the inflation in year 21 and 22, especially in 22 and 23, the profitability of majority of the company was down. But then in FY24, even though revenue jump was not that significant, because of decrease in commodity prices, majority of the company reported a very high increase in profitability. So if you analyze the 9-year PAT of FY24 YOY, I think the growth is more than 40-50%, if I remember correctly. Now going forward, what I observe is, in the last 2-3 months, all the commodity seems to be on fire. Whether it is copper, which is all-time high, aluminium. Now China has announced decent measures to improve their property market. So obviously it will have a positive impact on steel. So all in all, if you see Brent also, it has remained elevated, which has now trickled down to results of tire company. They have reported, degrowth in terms of profitability Q1Q. So all and all, what I see is next year the revenue growth will not be very significant, but the profitability on a higher base may not come. So the outlook for FY25 in terms of fundamental seems to be slightly on the lower side.
Right. So lower, maybe the fundamentals not really turning out as much. There would be more caution rather, and till you put every other piece of that puzzle in place. But quickly, Rajesh, I'm going to have you have your last say. Any picks that you have, any recommendations for our viewers that stocks that you would want to keep on your radar, especially just a day ahead of weekly expiry as well?
So I think pharma is a space where stocks are showing good buying interest. Lupin is on our radar. We believe that the way stock is now negotiating with its multiple supply zone, and the data is also on the positive side for Lupin. So one can buy Lupin for upside target of 1730, 1740. Keep your stop loss at around 1685. Another stock that we like is from cash segment, that is V-Guard. Stock is now trading near to its all-time high trajectory. The way stock is moving up and the volume action is also supporting in last couple of trading session. Weekly chart is clearly showing higher high-low formation. So we believe that V-Guard can also continue furthermore upside. Possible target for V-Guard we can see towards 430 to 440 in short period of time. Keep your stop loss at around 368. And the third stock that we like is Coal India. The way stock is moving up, stock managed to give breakout of its February swing high. So it's a clear breakout on daily, weekly time frame. We believe that Coal India can continue furthermore upside. 530, 540 could be the possible target. Keep your stop loss at around 495.
Right. So interesting picks there from Rajesh. V-Guard as well as Coal India is what he has on his radar. But with this, we are completely out of time. So let me thank both Rajesh Palviya from Axis Securities as well as Subham Agarwal from Aequitas. Thank you so much, gentlemen, for giving us your time, speaking with us, helping our viewers with their queries, and also giving them some perspective on how they should be trading this volatile market. Well, with that, it's a wrap and goodbye from the entire team that puts this piece together. Thank you so much for watching. But do please post us your feedback in the comment section below, and also keep writing to us on our live stream so that we can take up your queries if you do have them and help you out in your trade. Well, for rest of your updates, do stay tuned to moneycontrol.com as well as the Money Control app.